Valerie, thank you very much. Thanks for the introduction, and it's very nice to be here. Nice to see all of you. It's my first time in this environment here, so thank you for the invite, Joseph. Nice to connect with you a month or so ago regarding this time. So let me give you an idea why I'm here, because the basis of what I do is I'm a certified financial planner, but there's a lot of relevancy to what I do and what you're doing and what you hope to accomplish with yourself and your clients. Um, I was in technology the first part of my career. And so I had a lot of downs because there's a lot of brand new companies. I'm talking about like employee number five, employee number seven, employee number 20. A lot of companies that don't work out. Most of them don't. And I've been involved in those in my 20s. And there's some that do. And I got involved in a couple of those when I was too young to really get any stock options. I was involved in PC World magazine the first year it was launched, and I was 21 years old out of undergrad school. So I've been involved in a lot of this stuff. My last tech company in the late 90s was a dot-com company that was acquired by a publicly traded company, and I was a senior level guy. So I basically had my exit. I had my retirement at age 39. When I retired, I had a bunch of different things going on financially. Had a new family, one daughter, one on the way. Had tax issues with stock options. Had investments that needed tending to or needed advice on. Had real estate. I had a couple of rental properties as well at the same time. So all this happened at the time that I exited that last technology company, and I was looking for a financial planner. And I did enough work to know that I wanted to stay with somebody who was like a certified financial planner because I wanted somebody to put their arms around everything, around the taxes, the estate planning. I didn't want to leave any gaps unattended to. And I interviewed at that point. I was in the San Francisco Bay Area in the East Bay, a suburb called San Ramon, California, and very nice area. And I interviewed in that area 10 different financial advisors. They're all CFP, certified financial planners. It's like the top designation of financial planning. It's like the CCIM of commercial real estate. And I basically got two responses to my interest in getting help on the real estate investment side. The responses were number one, good for you, congratulations. Just give me the numbers that you have and I'll put them into the plan. And all that meant to me was that they were going to collect my data and they're just going to put it in there, but they had no insight to that. They had no advice, had no thoughts. They're just data collecting, and they just wanted to kind of get that behind them because they wanted to go on and mostly manage, the money that the stock options that I was dealing with. So that wasn't very helpful because I really, like many of you, I had a very strong interest in investment rentals. I wanted to do well in everything that I was, dealing with, especially that because I had a personal interest in that as well. So that wasn't a very acceptable answer. And the other response I got, it was almost 50-50, was even worse. And it was, hey, good for you. Congratulations. Why don't you just sell those properties, right? Sell something that I'm interested in. I'd love to learn more about. Just sell them. Forget that idea. These are not the thrones you're looking for, right? Like the old Star Wars movie. And we'll put them into bonds because bonds are just like real estate. So at that point, I knew that they weren't like real estate, not just for the obvious reasons, but also for some other reasons like taxation and so on. But I found out later that they're not at all like bonds. It's just a whole different environment. So I said, I'm kind of, I don't have anything to do right now. I want something to do. Real estate represents 30% of our country's wealth. So all of us, whatever we own, 30% of it is in real estate in one form or the other. And there's not a financial advisor out there because the CFP is a top designation for that group that that seems to care about income property or real estate. So I set out to be the person, another niche, the person that knew, how this worked. So I went to the studies. I went to get my CFP. I got licenses, and really within a couple of years, I was up and running. Um, and I was a certified financial planner who did comprehensive planning, which means that I put my arms around everything, what I was looking for. But I had a specialty in real estate, and it was a growing specialty. You don't just kind of come up with it all of a sudden. Had a good advice and a portfolio. I earned my CCIM, so I've got that tackled. There's not a lot of us out there that have a CCIM and CFP. There's, I think, the last account, there's four of us. The other three were CFPs first, and they went into commercial real estate because they realized it was actually a lot more lucrative. Um, so I'm kind of here all by myself in this nice little bubble. Um, and I give advice to families and individuals who have questions about their real estate investments. That's what I focus on, investment properties. And they could be anywhere from, I had one client that had nothing but land, raw land. His income producer was leasing that land, and it was selling the windmills in California. Made a lot, actually half his income came from the windmills, windmill leasing. Um, and all the way from, so from that up, that was 95 million to commercial buildings. But most of my clients own, because this is what most of America owns in investment real estate, most of my clients own single families, townhomes, duplexes, fourplexes that they rent out. So that's really what I find myself working with in terms of client base is mostly that skew. And what I've learned early on, because I have a process is called the Real Estate Income Lab, and it is a process I developed where it is a lot of coaching because I have now a lot of commercial and residential investment experience as an investor myself. So it's kind of that that insight, that fatherly advice, but also I collect the data, I do the analysis, I do the cash flow model on each of the properties that my clients own, and I put it into a financial planning technology that considers, and I have to tweak it a lot because there's not anything, the financial planning tools out there to create financial plans don't really care about investment real estate. They care about the asset, they care about the cash flow, but they don't care about cost recovery and they don't care about, taxation over time and what happens if you exchange it or you do an opportunity zone, anything like that. So I have to jerry rig that stuff, which is actually a pleasure. It's kind of fun, to do that, to optimize the system I have. But I put them all together, the technology, the insight, the data, the analysis, and bring them all together and help people solve their real estate investment problems. And I say their problems because when they come to me, they come to me when there's a problem. Now, I got to say that when I owned real estate, I didn't have a lot of problems because we did a pretty good job. We had a couple of problems you'll never get away from, issues that pop up, but we were able to manage it or see ahead or have reserves that cover things, that sort of thing. But when they came to me, they were stuck, most people. And that's why they came to me. They'd be willing to pay for the help to get out of this, and they can't find somebody else who could do this. So that's who I work with mostly is people that are stuck in some sort of decision they have to make, and they don't have anyone that can help them quantify it. Not a CPA, because CPAs go back in history, and they're not very creative in terms of looking forward and investment ideas. They don't get paid for that risk. Certified financial planners, we already talked about that. Attorneys, mostly on the legal side, and then there's the brokers who and the mortgage folks, and we all have a part of this, but people like to people like to find somebody who can actually put it all together. And I work with all of those disciplines too, by the way. So I have specialists in most of those areas. So that's kind of what I've been doing since 2003 and 2005. Because at that point when you're in the land of the blind, where nobody knows how to do this stuff, the one-eyed man is king, right? And at that time, I had one eye in this field because I was learning. and I began teaching courses at UC Santa Cruz, and then a year later UC Berkeley extensions, both of those, and they both have certified financial planning programs. Actually, Santa Cruz just stopped theirs the last 6 months, but I've been teaching there for since 2005. And I have my mix of students are people that want their CFP that want to learn more about how it works so they can talk to their clients more intelligently, or I get investors or professionals. So that's who attends my class. I would say it's like if you ever looked at the CCIM curriculum, it's only a 15-hour class. So that's the downside of that, because that's all that Berkeley has for that class. But it does cover a spectrum of things that CCIM does. I'm not able to squeeze. CCIM has 4 weeks that you have to go through, then another week or so of electives, something like that. But those 4 weeks are 40 hours times four. That's 40 times four is 200. I'm sorry, I can do the math. 40, 80, 160 hours. But mine's only 15. So I really focus on the real sharp things. Go deep on a few areas, and then I refer them out to CCIM after that. So I've been doing these classes. I sold my firm about 2 years ago in the Bay Area. I moved out to Colorado, Monument, Colorado, and I picked up. But so I sold my old firm. It was a nice sale, another exit. So I'm really very proud of that. But I started up again from scratch, and my firm is called the Real Estate Whisperer Financial Planning, and so that's my background. I'm sorry to talk so much about myself. Valerie thought it might be useful to give you perspective, and I think the journey is unique enough so that you probably haven't heard this from somebody else. Okay, Valerie. Now, what? I'm open to anything.
Yeah. Oops. Oh yeah, okay. I just want to make sure I was off mute. Um, if you could delve a little bit into kind of what Whisper your Whisper company
The Real Estate Whisperer.
provides. Yeah, because it's obviously a compilation of your history and the challenges and things that you learned, et cetera, through the years, and you've kind of come together, right? And that's how the best companies are made. We find a problem
Yeah.
and we create a solution, and then you create a company around that. So um I
Then
know
you create more problems and then you have to create more solutions.
Yeah, that's right. It's a big, ugly snowball, right?
Yes.
Yeah.
Yeah,
exactly.
Rich. Rich, I have a question.
Yeah.
So regarding 1031s, is there such a thing as a 1031 reverse where you, I guess you sell your property that you own first and then buy the one that you want to purchase?
Yes,
Could you
exactly.
elaborate that?
Absolutely. Yes, there is. There is a strategy like that. The intermediaries we work with, the 1031 exchange companies, have the details on that. They would actually be the facilitator of that of implementing that for you. But essentially, what you said is right. You go out, you identify your intermediary who's going to handle the exchange for you. They actually become the owner of that property. They buy it on your behalf. They structure it in such a way where they have minimum liability. I don't they think they don't have any liability, but they really have minimal liability. They're able to hold it for you while you sell your property, and you can perfectly exchange into that. So that can happen. The amazing thing about that, to me at least, first of all, it can be done. So it's on you to find the right property, right? That's always the risk you take in an exchange. Um, but the thing that always surprises me on that is the cost structure on that idea. Um, in terms of the intermediary cost, I would just generally say that an intermediary will charge you $1,000 or less to transact a regular 1031 exchange. A reverse exchange, I think the cost is about $5,000. So the cost of actually having a player play that part is not that high. You still have to capitalize the investment, get the money somewhere, get the loan to do that. So that's a different cost. But the that was a long answer to your question. The short answer is yes, it can be done. And if you need a name of an intermediary or two that can do that, I'm sure this network has a lot of referrals for you. And I'm a backup as well. I can help you with that too. I don't do that work, but I can give you a name or two. Happy to take any questions that you have, folks.
Yeah, go
Yeah,
ahead,
looks like
Lamar.
Lamar has
Thank you,
one.
sir. Appreciate it, Joe. So, Rick, since you are in an investing world in today's era where the market of real estate is fluctuating so rapidly, and it's kind of hard to put some kind of a measurement to, whether it's going to be a dip or up, what's your recommendation with your experience and the investment piece if somebody wants to work with you on financial planning for retirement or investing in commercial or residential?
Yeah. I guess I can break that question into a couple different parts. It assumes that I'm following your what you're saying. I don't. I don't. I guess the first part that kind of pulls me back a bit is I don't think I agree that real estate is that volatile. I think that by comparison, the stock market is very volatile. This last week and a half, we've seen nice ups, we've seen some dramatic downs, we've seen some nice ups again. We're still not at parity, we're close, but that's to me, that's volatile. Even if you take that activity over 6 months, that's still very volatile to me. With real estate, it's a lot slower moving because it's not traded every day. It's not on the exchange. So as a result, you have to wait for people to do things and then be able to kind of. I think it's really kind of a slow motion volatility. And I don't really think that, and I do believe that on the commercial side of real estate, there is a lot of, I don't think it was volatile. I think it was almost expected, like the office building marketplace with all the debt coming up. And I think we're getting to what I understand. I'm not an economist, but what I understand is like, for example, we're getting near the bottom of the whole office problem in terms of delinquencies and in terms of the valuations and so on. I think we're getting close to the bottom of that, is what I understand. But that's been kind of a fairly that's been going on, and people could see it happening. So I don't think it's that volatile. Um, in terms of, so I would just break that apart for a moment, assuming that it's somewhere between where you and I are saying, and it's kind of like moderate volatility. Um, I think that I think that the first decision is, do you want to make a good in real estate investment, or do you have to make a real estate investment? Because where I see mistakes taken, or I see mistakes made, are people that come up with a bunch of capital, and this is their time. They finally have enough capital to be able to purchase, put the down payment on property, and they need to buy a property. And when an investor needs to buy real estate, that's when they put themselves in the most trouble. Um, by contrast, I'll give you an example here. I bought some real estate early on in the late 90s, and I really didn't know what I was doing. I had a broker's license from the 80s that I just continue, and I still have it today. I don't transact with any third parties, but I felt I knew more than the average. I thought I was making good choices. It really took me into the CCM curriculum to figure out that really I just did the cash flow on my own property and realized this sucks. I didn't make a great decision. I could do better. And I know I realize I'm popping around. I'm going to try to bring this back together. What I realized from that experience is that, and from working with clients and later, is it was really commercial real estate. When you get a little bit higher, and you lose a lot of the dumb money. When you buy higher priced property, there's the dumb money tends not to follow that. Um, so that's when we started getting really good at it. So at that point, and this is going back to the point, for me, it was like I didn't need to buy real estate, but I wanted to buy it when it was, kind of in my own policy statement for real estate. So when it hit my target and I said, okay, this is what I need, and finally properties were able to get to that point, and they did that in the early 2000s, 2003 and 4, when we made our best investments. That's when I went ahead and pulled the trigger. So I think there's a difference between having a desire to buy it, and you got to buy something, or just having being patient and waiting. And that's what we did. And our properties, we ended up buying 3 skilled nursing facilities in 3 parts of the country, 3 different states. And they worked, and we held them for almost 20 years, and they were blockbuster. I don't want to, I hate to use exaggerated terms like that. They were very strong performers. the first year, you guys are going to die when I say this. The first year cash flow was 12%. So that was our cash flow. That was what we got. We did take a lot of risk on that, but we mitigated that risk several different ways. And we had a very good broker who specialized in this asset class. So, and we did have problems, especially when they changed the Medicare reimbursement rate. And our provider, our tenant in Washington State, said, "Hey, we're going to stop paying rents for 2 months. Then we're going to pay you half as much. Do you agree or not?" So we did have problems. Did go dark for a year, but that turned out into another different type of success story. That was actually a better outcome than any of us could have expected.
Right,
So,
right.
so I guess that's a long answer, and I would say that you have to figure out that you're going to wait to buy when it's right for you, and not that you have to buy. That's part
See,
of the response. Sorry.
right, what I'm seeing, because I'm also a investor, but I am seeing global conditions affecting internal America more than internal America itself. So since there are new policies of interest rates and Fed cuts, they are still on the horizon. We still don't know it's going to happen or not come September. With the stock market taking dump, people are going towards more of a metal to understand, at least save their dollar power. With the petrodollar skipping under our feet, we are still in a trying to understand zone of what happened to us and how long can the dollar sustain. With the market as it is, global conditions affecting on many levels, do you think is it worth spending money or investing funds in the real estate market in US or overseas?
I'll focus on your concern first, and that's about the local impact of the global markets and what's happening, and the idea that precious metals might be a way to go for right now until things get settled. You know, uh, I've been hearing this stuff for over 20 years. Every couple of years, it's the same stuff that I hear over and over again. And I really don't know. I'm not that smart where I know exactly how all these little things kind of impact what we're doing today. But I do know that today is just today, and that long term things work out. And I don't think I'm being naive because I've actually went through a couple of different markets that were terrible. We were in the dot-com crash, and then a crash in 2008, and then COVID. This is certainly what's happened this week is not comparable to any of those. Those are three significant drops. I think two of them were the worst. The depression. That's the worst, and then these other two were the next two in the history of the stock market. So I have a long-term view of this, and the long-term view is that things will work out. People will need real estate. They'll need places to store their merchandise or to sell things from, or they certainly need places to live. The office thing will settle. Some of the retail stores will become Amazon distribution sites. You know, I think where there's a problem, there's also an opportunity. And so I don't want to. I'm not very qualified to get into a discussion about, should we go to gold or what is Bitcoin about? I just say, keep it allocated, and don't be heavy in any one area. Even real estate, don't even be too heavy in there, or you could create risk for yourself. I've seen that happen, by the way. Um, but so I can't help you with that because I don't share the concern that you do about what's happening today. I look at this long term. So I look at the market, and I have a lot of money in the market, the stock market, and I'm looking at how much I lost these last couple of days. It's like, okay, I know it'll pick up, and then it has a little bit. I'm just not even concerned about it. I don't. I know that doesn't answer your question. I'm sorry about that, but I think it gives you a perspective of my perspective on that.
No, I appreciate it. Thank you, sir.
Sure.
All right, we got Richard.
Hey, Rich, thanks for coming on, and my apologies that I tuned in a little late, so I may be a little bit behind the curve on your services and maybe what you shared initially. I've got several questions, so we might need to do it offline at some point, but I guess my thought is many of us on here are brokers, myself included. Of course, there's some investors or people that do both, like myself, invest in brokerage. And commercial brokerage particularly, I don't know that you practice commercial brokerage at any great length of time, but you're probably well aware that commercial brokerage does sometimes get muddied from the residential brokerage side, where it's kind of the client assumes that it's kind of similar and one person can do the same task. And I know that organizations like CCIM and Counselors of Real Estate and the SEC, Society of Exchange Counselors, are trying to professionalize and create more of a strategic or a consultative model. I know you do no brokerage because you don't want the perception of conflict of interest, but I think for those of us that remain in the brokerage field, particularly in commercial, that having a strategic or a consulting aspect of our careers could be beneficial to level the income stream. But also, we're in the trenches day to day. We know neighborhoods and submarkets. You would have to get that guidance from individual brokers or other people if you want to advise your clients about what's happening. And we're probably in the greatest tectonic shift of repurposing of real estate and its needs, whether it's office or data centers, all sorts of different usages that are coming up. So even though you don't practice it, I'm wondering how you see the consultative side or the strategic side of brokerage, or people that might, even investors that might perceive brokers or advisors on how they might enter that field.
Yeah, that's a long question, and let me see if I can just the first part of it that I want to clarify for everyone here, the idea of conflict. I don't think there's a conflict if you're a broker and you're helping a client out and you serve your their needs and you get paid for that on a commission basis. I don't think there's a conflict there at all. For me, where the conflict comes in is that I act as both the advisor and also, if I were to sell the property, which I don't, the seller. And that's where the conflict comes in. So you guys don't have really the conflict that I would have. So that's why I've never sold real estate as a financial advisor. Um, where there was conflict, and this might answer some of your question, and what I did was my previous firm. This current firm I'm at, I don't offer investment management. I don't sell real estate. So I just give it the advice. And so there's no conflict that way. But in the last firm I was at, where I was giving the advice, but I was also managing money, that is conflict. I mean, that's inherent conflict. There's nothing wrong with that either. But you just have to make sure that your behavior and your advice isn't at the detriment of your client. So I see to answer your question, I see the role of a broker as being kind of the same way. The you can decide to be a really good broker and give really good advice and sell something to get a commission for it and be fair and honest and put the client first. You can decide to do that, or you can decide the otherwise, which is not what you're suggesting. But you said the problem in the very beginning. The problem is that the clients don't really know which one you are. So that's really that's what the challenge is. Um, I guess that's how I think I don't think you can get around that challenge. The way I managed that challenge on that side was by getting credentials that are hard to get. So the CFP is hard to get. The CCIM is hard to get too, especially when you're not a broker. It's really difficult to qualify for those transactions. And I did them by showing getting paid by fees for transactions and the value of those transactions. That's why I got them. So I think getting credentials, and I think the other thing that really I feel helped me, but I don't really leverage it very much, is teaching. So when you add the credentials with teaching, especially at a school like that, and I got lucky. It's not like I'm the smartest instructor there in the program. I think I'm effective, but I think it's because my content really drives that. There's not a lot of people that can teach that. So every semester they're dependent on me to hang in there, right? They're probably worrying, what if he leaves? This whole class goes south, right? So I think those are but Richard, to answer your question, those are the things that I put together. And I guess the last thing I would say to you, um, something tells me you don't have a problem getting credibility. But the last thing I would say to you is that my first peers, when I got into this business as a planner, is like the title company, the exchange company, a commercial broker. Those are my first peers. My second ones were CPAs and attorneys, which are typical ones. And you might want to think about that too. I think a great partner you can have, I'm not being self-serving here, but especially if you're local market, find a local advisor who is, fee only, or he's only planning only, that doesn't interfere because there's it's a growing area of financial planning is plan only, fee only.
Is
So
what?
it's plan only, fee only. So if you think of a financial advisor, you think of somebody that sells investments and insurance, that sort of thing. Uh, Nowadays, there's a growing interest um, because there's a heightened awareness of conflict, and the younger generation is really pushing this, which I'm grateful that they are for planners that only do plans and that only give advice, but they don't manage money. Folks like myself, it's actually a growing field. So there's a last thing, and without getting too long, there's an organization called uh, it's called NAPFA, NAPFA. I think that's what it's National Association of Fee Only Planners, something like that. So if you need some direction or some directories on that, just contact me, and I'm happy to share them with you. But that's my thoughts, Richard, on your question. If that helps at all.
No, I think that's very helpful. Thank you. Of course, one thing leads to another, but we'll leave it for now. Maybe
Well,
follow up.
that's the thing. I mean, your path will turn and twist around, and as mine did. It wasn't a perfect path. It was a so.
Which, how long does it take to get your CFP? If somebody wants to start down that journey, how
Yep.
long? Typically?
If you're totally committed and you want to just kind of bulldoze through it, you can get your CF. You can qualify to sit for the CFP exam in about a year. Once you get the exam date, then it's like you're subject to their 3 months you have 3 tests a year. Then so it's probably about a year and a quarter to pass the test. And then you have to wait a couple of years and have experience in this field in the financial planning to be able to use it. In the meantime, you can say candidate. And the last thing I would say is that when I got in this business, I was able to use my past real estate experience back in the 90s, early 90s. I was in the business 2 years. Um, you can use that, and I was able to position that as giving advice. Nowadays, I think they're a little bit harder on that. Um, so I was able to kind of use my designation right away.
So you had to complete your coursework and work as an apprentice under somebody else, or work for another company. How do you
Yeah,
get that experience?
yeah, the learning curve. I got lucky. So basically, I started with a company that was very strong in estate planning training, and the insurance companies are very good at that. They're very good at advanced planning. And when you go to advanced planning, it takes you all the way through the basics and intermediate stuff. And you're here, you have to know all this other stuff. So it's like a fire hose for 6 months. But the great thing is that once you're there, you really know more than most others. The bad thing about going to an insurance company to get advanced planning is that they want you to sell their insurance products. So after 6 months, I got my stuff and I realized that they were very clear that you only had to sell Lincoln financial stuff, and that's not what I wanted to do. So I moved on and began independent after that. So that's what my path was, and it was accidental.
I mean, that is the general challenge, right? Most financial advisors out there, they represent one company's products, right? You really want somebody who, like you said, I don't know the term you use, like a fee-based or consulting-based. So you're looking at overall what's best for the client instead of pushing just one company's products.
Yeah, it's really so. I belong to a Facebook group that's uh, as part of a big organization that helps train new advisors. And so, and I joke with them, and this always gets taken down, but as a post. But one of the most popular things is, "Hey, I got my license. Now what do I do?" Right? Or I got this client. Now what do I do? Okay, so they were able to wrangle in somebody to be able to help who trusts them, and they're thinking, okay, now what do I do? Because as you know, probably from your real estate training, what you learn in real estate school is not what you actually do out in the field, and that's the same thing in this business too. So it's really heartbreaking to see that question, what do I do? And I say, well, I suggest you work under somebody else for a while, and share that that revenue, and get the benefit of that experience, and make it somebody who's really tough on you, who's very does advanced planning. So yeah, that's not a very popular post. Um,
Now, we have been coaching and training real estate agents in commercial real estate for a while now, and some of our students or some of our customers have multiple line of business. Everybody wants to kind of have multiple streams of income. So some of the things but the very popular one is like a franchise broker, which seems to be in line with real estate. One is a business brokerage in general,
mhm.
and some people have gone into more of a annuity, offering annuities and life insurance without having to go through the full, CFP process, right? So,
Right.
what is your thought on people diversifying, having multiple streams of income, and do you have a preference of one versus the other? I mean, most of us are here commercial brokers.
Yeah. I guess it kind of reminds me of Richard Hall, the fellow that asked the question just a few minutes ago. He made a reference to some people kind of going up to the, you know, commercial real estate, but really being more residential, that whole mid
Mhm.
area. And I know CCIM didn't make it any easier differentiating because they have a new certificate, I believe, that speaks to that. Basically, a revenue, it's a revenue play. Um, I guess multiple streams of income. I guess there's nothing wrong with that. My own experience is from all the way back from my first job at PC World, which is a magazine all about the personal computer for IBM and compatibles. I mean, that's very vertical. Um, so the more vertical or specialized you are, the deeper you go, the more money you can make, the more unique your story is, the more people that'll support you. That's my own personal experiences. It's always been about niches for me, you know. But that said, in my older company, I did have multiple streams of income. I had the financial advisor fee. I had the investment management fee. We did life insurance. We did long-term care insurance and disability. So we did have those, but they all seemed to funnel in the same area and work inside the same plan. So I never thought before or even after that I think it would be distracting to have doing different things like doing Etsy and this and that. But as a commercial real estate broker, I think that to be able to maybe help facilitate loans to leases. I know leasing is a whole different area. I don't want to take that lightly. Broker, you know, I think that makes sense. It seems to all be in the same funnel. But I think doing Etsy and then doing yard sales or professionally or whatever, that was a bad example. But I think that's probably a little bit harder. You get a little bit.
Yeah, and we do have a couple of folks like Charles is on the call today. I think he's a mortgage broker as well as a real estate broker, right? So that's pretty common
Yeah,
uh, in the real estate world to have two lines of business, right? And they are
yeah,
pretty much complementary to each other.
yeah. The secret for him would be to find a great source of the mortgage stuff to save him all the headache from having to upload all the new technology and learn just have one person to go to and just draw from that person. Yeah, that would be a nice way to simplify that.
Awesome.
Well, perfect. We're kind of wrapping up to the end of the 11th hour, and we always like to at least kind of have one breakout room. I love the engagement today, you guys. I feel like if someone has a question, you definitely know that someone else has a similar question. And so by asking those, we help deeper that conversation and that knowledge across everybody. So I appreciate it. I think there was tons of gold there. I love so many things that you said. And I really hope people actually captured some of that. Obviously, the topic that was just brought up, right? Creating multiple streams of income in a niche. I think there's huge power in that. But also when you were talking about, right, your eyes wide open. I think that's so fantastic. Many of us start our journeys because of someone else, right? We see someone else in its success. We see another story. We see someone else's suggestions. And I feel like sometimes when we start to go, maybe that's where our questions start to come in, right? Because we follow someone else's lead. And as you get into it, you realize your story is different and your goals are different. And so then you all of a sudden have to take a step back and be like, oh, shoot, wait a minute. Now I actually need to understand my journey and where I'm actually going with this, right? And so I love your journey that you had and that you shared with us and kind of where that's spiraled into. But it does help like alleviate a lot of future stress, right? Because if you know where you're going and you know what you need to get there and how that aligns with you, then you can take the correct financial steps, investment steps, partnerships, whatever that takes to get there outside of what the external world is doing, right? Because you're going at your risk, you're mitigating what you can. And that's the power of commercial real estate. It's not just how we apply our debt. There's a lot of very creative solutions in the commercial world. And so I think it's powerful. Richard talked about there were some external things that happened on his properties he couldn't control. But as you hold properties and you adjust your strategies, they became more profitable than you could have projected. Mm-hmm. So it's through your understanding and your experience and your alignment of your partnership. So connect, right? That's why we try to connect with others and align ourselves with those who have that experience. But then as things come, it's all you're learning, adjusting, and opportunities unfold that you just never would have expected in the first place. So we can't foresee the future. Even economists can't foresee the future, right? But we know what we're needing, and we set ourselves up in that risk that we're okay to take on, not someone else's. So I love that, right? Understanding your financial future, understanding the numbers, and aligning appropriately. So I definitely want to connect with you. I hope everyone will reach out to Rick. There's just so many things that he can provide in different areas. And you're a dog dad and a Scorpio, right? I love
yeah.
You can see things in the back. I always love to engage in those ways and get to know people more that way. So I really appreciate the time.
Thank you, Valerie. Thank you.
We're gonna switch to networking, and if you want to stay on, I know it'll be fantastic. And Terrell, you're awesome. You should put your information up there as well. So
thank you.
Yeah.
Cyril.
Everybody please copy Richard's information and reach out to him. So it's in the chat. That's the last one in there. So you can copy his email and phone number and his LinkedIn profile as well. So that's how we stay connected.
Right. Don't invest blind. Have that clear picture moving forward. So thank you again.